Rule breaker mailbag item number 8. And oh my golly, is that Emily Flippen here joining us in the studio? Hi, Emily.
Hi, how are you?
So you're here because I want to talk about Chinese ADRs with number 9. But since you're here, I wanted to share this whimsical question with both of you. Whimsical might not even be the right word. In fact, Patrick in Canada, Patrick Hoffman, who's writing us, is using the word ethical. So we'll talk maybe a little bit about ethics. Who knows where we're headed with this one? But let's start it off. So he says, ethical question from an aspiring investor. As an aspiring investor, Patrick writes, I'm wrestling with ethical questions I'm hoping you could shed light on. It appears to me that the whole concept of the stock market is based on one principle. Patrick says that this part of a company that I'm buying today will be worth more later than it is now. But isn't this idea, he goes on, based on a fallacy of infinite growth? It's impossible for a company to continually grow forever. My concern is that in this unending pursuit of growth, are companies not encouraged and rewarded for doing whatever it takes to increase profits, including maybe pushing ethical boundaries? Might be a silly question, one I'm seriously wrestling with, though. Patrick in Canada. Now, David and Emily, I'm really interested in both of your perspectives. All I'm going to add in is this from Hamlet, because how can I read the phrase infinite growth and not think of, alas, poor Yorick? I knew him, Horatio, a fellow of infinite jest, of most excellent fancy. He hath borne me on his back 1,000 times, and now how abhorred in my imagination it is. And it goes on from there. One of the most famous scenes of all of Shakespeare, of course, were the Motley Fool. So we're going to have this Shakespeare vibe going through this podcast as we have in the past, but a fellow of infinite jest, as Hamlet holds a skull, and was kind of the court jester of his time when Hamlet was a little kid. And now all he has is just Yorick's skull that he discovers with the gravedigger, a fellow of infinite jest. So a market of infinite growth. Emily.
I like to believe that some companies are capable of infinite growth just because I want them to be capable. I think Amazon is a great example of that. But when you look at a company like Amazon, it's hard not to ignore the ethical issues that Amazon has had. So while I don't believe that any one company can grow infinitely forever, I do think that the market rewards companies that grow ethically. And so companies that are more and more taking an ethical manner to the way that they do business, to the way that they grow, I think especially as we get further and further into the 21st century, those are going to be the companies that are rewarded. And as an investor, I often think that I'll miss out on amazing growth opportunities because I don't invest in companies that I don't see operating sustainably and ethically. But I think as an investor, you have to make that choice yourself.
Yeah, I think it's interesting to hear Jeff Bezos talk about this because Amazon at one point crossed that $1 trillion market cap hurdle and still one of the biggest companies in the world, although the market cap has dropped a bit recently.
I've noticed.
Yeah, it's a little bit painful, but he really said, the bigger institutions, whether it's governments or companies, they should invite more scrutiny, whether it's from the public, from regulatory agencies, from consumers, all these different stakeholders. As organizations, or in this case, companies get bigger, they will invite more scrutiny. And I think they will be held to a higher standard, whether it's by their customers, their employees, regulators, whatever it might be. So companies, I agree with Emily, will, especially in this day where you have social media and so much more insight into these companies through the internet and through that connectivity, companies will need to increasingly operate in an ethical way if they want to survive, let alone grow over the long term. And I think there's also just a beauty built into capitalism where I think theoretically every company would love to be the one dominant company in the world that does everything, but there's just that built-in mechanism of competition among companies. Like if you go back to 1980 and look at the top 10 biggest companies in the Dow, the biggest companies in the world, I don't think any of those companies are in the top 10 today. You have companies like IBM, AT&T, ExxonMobil, which is still a bigger company, but then you have Schlumberger, Shell Oil, Mobil. You really just had a bunch of energy companies that were the biggest companies in 1980. And really, the top 10 companies in the Dow or any index actually don't typically have a great track record over the long run.
Once they establish that huge size, right? It's just harder to grow those things.
And we'll see, maybe that changes with the dynamics of the internet and with software, where you don't necessarily need to build more physical infrastructure or more drills or whatever it might be, physical assets to expand, where instead you can just sell more software or sell more ads. It's a much more scalable and bigger business model. So it's an appropriate conversation, probably best for, a 2 a.m. discussion in a dorm room or something, maybe with the assistance of some other substances to really get the most out of this. But I think there is some built-in competition there that limits the ability for any 1 or 2 or 3 companies to really reach that pinnacle of being one of the biggest companies.
I agree, and I think history proves that, and I'm delighted that you brought history into it, David. I will say, just for my own part, that last week's podcast with Paul Rice joining us, Improving Business Through Fair Trade, Paul is talking about how capitalism is changing as we speak. And in a way, I do think it's becoming more and more ethical thanks to people like Paul and many others that realize that the best way to grow, as Emily just said, is to grow ethically, because when you do so, people want more of that. If a company is growing unethically, I think that's increasingly unsustainable in this world. I think we all want better from business. We're asking business. We ask a lot of business. We're asking entrepreneurs like Jeff Bezos to do almost everything. Keep growing, keep innovating, and do everything well. And by the way, don't make any mistakes or you'll get flamed on social media, right? So it's really quite remarkable what we are asking of some of these great public companies of today. But yeah, so Patrick, I hope that was helpful. I hope we helped you think through it a little bit. Infinite growth, I will say, in closing on that a lot of times people think that you shouldn't hold stocks for a long period of time because it can't keep growing forever. And they'll point out how lots of companies aren't around anymore. But what they neglect to mention is some of those companies that disappeared over the course of time were simply bought by another company. Some great companies like Marvel, for me, was a great stock. It no longer shows as a stock. It would look like Marvel disappeared if you're looking backward. But all that happened is, as we all know, is that Disney bought Marvel. So the infinite growth doesn't need to be infinite. We all have finite lives, but some of these companies can be held quite a long time. And sometimes when they disappear, it's not because they went bankrupt. It's because they got snapped up at a premium.